So recently, everybody's been focusing on the proposed tax law changes that are, in a lot of respects, being pushed through Congress very quickly. Everybody's seeing on the news that there's little notes in the margins and the laws being pushed through, just like it seemed like Obamacare, the healthcare law was. And many people are confused about exactly what is happening. So I just wanted to discuss a little bit about some of the changes that are coming about and what you should expect depending upon where you live. The main changes are coming in, first of all, there's some minimal changes coming to the corporate tax law. Just the rates are changing really from potentially 35% to 20%, a 15% savings for the corporations, which we're hoping leads to the companies keeping more money within the United States instead of sending it overseas to these so-called tax havens in the islands generally. And they're going to be phasing out the Section 179 immediate deduction of some capital expenditures over the next 5 years or so, where they're going to eventually reduce it to 20%. But the main differences are coming in the individual taxes. With the itemized deductions, the AMT, the alternative minimum tax, they're going to do away with the state and local and real estate tax deductions, which in the higher, more expensive areas is really going to hurt people. For example, where I am in New York, we have very high real estate taxes and income taxes in North Jersey, New York. Connecticut's not so bad on the real estate taxes. That being said, it's still more expensive than many other areas in the country. California is going to have a problem with that. But in return, they're increasing the standard deduction. It's going to be doubled. So a lot less people will be itemizing. And contrary to popular belief, they're not doing away with the business expenses for your business. It's just unreimbursed employee expenses for your job. And they're changing the mortgage interest deduction, where they're going to cap it at $500,000 of principal for your mortgage instead of the current $1 million limit. So it's not going to really affect places with the lower property values, the lower state income taxes, the lower real estate taxes. It's really going to be a problem for the Northeast and the Western states like California. So the estate tax exemption is doubling, which again, it's another sort of hot topic because that really only helps the wealthiest families in the country. Not too many people, relatively speaking, have estates over $11 million. So it won't help the lower and middle class taxpayers. That being said, in the short term, we're hoping that these tax law changes really help everybody a little bit, whether they're wealthier, middle class. We're sort of hoping that it'll help out all taxpayers. And lastly, the exemptions, the personal exemption, which is currently about $4,000 per person, including any children you have, will be done away with. But in return, the child tax credit will be raising from $1,000 to $2,000. Now again, this is all preliminary. The bills that had currently passed the Senate and the House of Representatives are currently in what we call reconciliation, trying to sort of negotiate the differences until we come up with a bill that everybody will be able to agree on.